Hello and welcome to Startup Street. I'm Shruti Mishra and with me is Arundhati Ramanan. These are the top headlines from the startup space. Meta is planning to begin large-scale layoffs this week that will affect thousands of employees, the Wall Street Journal reported. The announcement planned as early as Wednesday. Meta currently has about 87,000 employees worldwide across its platforms, Facebook and Instagram, as well as WhatsApp.
Twitter fires more than 90% of its staff in India over the weekend, severely depleting its engineering product staff, Bloomberg News reported. About 70% of the jobs cut in India were from the product and engineering team, which worked on a global mandate. Positions were also slashed across functions, including marketing, public policy and corporate communications, the report added.
Upgrad to invest $30 million and open 10 global campuses in the US, India and other regions next year under a new brand name UGDX. 3 institutes will be opened in the US, of which the San Francisco unit goes live in January 2023, 5 in India across Delhi and Chennai to add to its existing facilities in Mumbai, Hyderabad and Bangalore, and 1 in Singapore and the Middle East each.
India's technology sector faces a key test this month as lock-up periods on $14 billion worth of shares sold in initial public offerings expire, allowing billionaire backers, including Warren Buffett and Masayoshi Son, to sell, says Bloomberg News. Lockups end in November for 4 consumer-focused tech stocks, which have all slumped in the past month, including Paytm and Nykaa.
Zomato's Vice President Siddharth Jhabbar, who was in charge of its recent foray into intercity food delivery service, has left the company. Jhabbar said in a LinkedIn post that he is headed to Tiger Global-backed ad-tech unicorn Moloko, where he will run the company's India operations. Meanwhile, Kamyani Sadhwani, a director at Zomato-owned Blinkit, has taken over from Jhabbar as the head of the intercity food delivery service.
Well, those were the headlines that we're tracking for you this evening, but straight to some of the key headlines this evening we're tracking for you. Today, Meta is cutting its workforce by a significant number. According to the Wall Street Journal, Facebook parent Meta is likely to begin large-scale layoffs starting Wednesday. The move is expected to impact thousands of employees and mark the first major retrenchment drive in Meta's history.
Well, chaos and uncertainty continue to loom over Elon Musk-led Twitter. After mass layoff at Twitter on Friday, the company has now asked some of the employees that were laid off to return to work. This, according to a report by Bloomberg. The report added that some of them were laid off by mistake and before the management realized the employees' experience.
Twitter, which had announced that users will have to pay $8 to subscribe to Twitter Blue, and reports say the company will officially launch this update after the US midterm elections. As things stand, Twitter Blue subscriptions will go live in the US, UK, Australia, New Zealand and Canada. He also added that an account will lose its verified checkmark temporarily if a user changes the name, while a user will be permanently suspended from the social media website if he engages in impersonation without specifying parody. Twitter Blue will likely be rolled out in India within a month.
From one Elon news to another, Musk and Twitter co-founder Jack Dorsey were involved in a war of words. It started with Musk's tweet, and I quote, "Twitter needs to become by far the most accurate source of information about the world. That's our mission," end of quote. To which Dorsey tweeted, and I quote, "Accurate to who?" end of quote. Post Musk's acquisition, he has been raising concerns over Twitter's content moderation, hate news and accuracy.
PB Fintech, parent company of Policy Bazaar and Paisa Bazaar, has reported a revenue growth of 105% year-on-year in the second quarter. Net loss for the company has narrowed to 180 crore rupees compared to over 200 crore rupees last year. The company has said that the growth has been led by strong growth in insurance premiums, credit disbursal and operating revenue. PB Fintech expects to turn adjusted EBITDA positive by the 4th quarter of the current fiscal and profitable at net level in FY24. Meanwhile, NPCI bats for a reasonable incentivization on UPI amid the ongoing debate on payment charges. Remember, a recent RBI paper had sought suggestions from stakeholders on charging transactions made on UPI, which are so far free of cost. While the Finance Ministry clarified that the government has no such plans, NPCI believes such incentives are needed to be able to invest back into the ecosystem and expand the market. In an exclusive chat with CNBC-TV18's Ritu Singh, the MD and CEO of NPCI, Dilip Asbe, also hinted that the Jan 2023 deadline of imposing a 30% cap on UPI apps' market share may be reconsidered. Hear him out on these and NPCI's international expansion plans, potential of UPI Lite, and why RuPay card share hasn't grown as expected. Take a look.
7.3 billion transactions crossed on the UPI. What is next? We've seen, the offline payment bit of it being announced. We've seen UPI Lite being announced. But what's the road ahead?
So UPI Lite now has been operational with almost top 80% of the top 30 banks, and the Bhim is the app which is live on UPI Lite, and you may want to just try it out. It's a great experience, right? You look at and what happens is it's an on-device wallet, and today if you look at UPI transactions take on an average 3 to 6 seconds to complete every financial transaction. The UPI Lite actually comes to 1/3. So in 2 seconds we are seeing the average number of transactions completing on UPI Lite. It's still a very small number, but we believe that now UPI Lite has a potential to make the time required, which can actually compete with the speed of cash, right? That's what we believe, and I think it's a good start, but we still have to see the growth and adoption by the citizens.
A bit about NPCI's plans to go global. Through your subsidiary for the international payments, you've tied up with Euroline and several other countries. What are the longer-term ambitions here?
So when you look at the NPCI International's plan, today we, and our Prime Minister spoke about that there are 2-3 things which we are looking at. One is, the India's public good can be the world's public good, right? So that's the globalization of NPCI platforms. And we see that there is a huge interest on the countries to leverage the payments innovation and payments platform what the India has built, right? So under the government to government or under the regulator to regulator arrangement, these things which will start operationalizing. The second thing is what we are looking at is the cross-border traffic, right? So and this cross-border traffic, we are looking at merchant payments, we are looking at the remittances, really real-time bank account to bank account, and at a later point of time, in 2 to 5 years' time, we can also start processing commercial transactions. So I'm saying that if the India can be the self-sufficient as per the government and RBI's vision, now that while domestic payments looks in a very solid state, can we be self-reliant on the cross-border pipes? I think that's what they're looking at with the at least top countries where it means a business back for the country.
About RuPay, since its launch, and it's still relatively new compared to some of the other global players in India, but its market share has remained more or less stagnant. Is it the zero MDR issue that is hurting the growth of the card, or what do your mind is the reason that it has remained, where it has?
See, there could be multiple reasons on that. I definitely zero MDR could be one of the reasons, but I think more to that. The UPI payments are growing, right? So technically what happens is, the customer is using his own money, right? When you look at the payment products like UPI, debit card or internet banking, mobile banking, technically you are using your own money, right? So finally, these are the choices customer starts choosing that which is the most convenient choice what he has, right? And today, and when you look at you heard the panel as well, today, when you look at the 0 to 1,000, the cash is prevalent. 1,000 to 10,000, maybe the debit cards are prevalent. And about 10,000 is mostly the credit cards, right? Because then the customer wants to leverage the 45-day free credit which bank is giving. So now what we see is the large penetration of UPI between 0 to 1,000 range. Sure. In my assessment, from 1,000 to 10,000, debit cards are still prevalent. In our assessment, right?
Yeah, but what explains RuPay's relatively, much smaller share in the market?
See, we are still 33% in terms of value and volume, both on the physical and e-commerce, right? So while you see that it has not grown substantially in last 3-4 years' time, but it has not dropped as well. We have maintained our market share in that sense, and I think the emergence of variety of choices could be one potential reason for that.
Speaking of MDR, since you brought that up as well, RBI released its discussion paper. I just wanted to get your thoughts. While the government has made the stand very clear, UPI will remain free for, for transactions of up to 2,000 rupees. But your thoughts? I mean, should it be market determined? Should there be a cap put on by the regulator? Should it remain free? And is that doing good for the industry?
See, today the UPI has grown substantially in last 5 years' time, and the UPI has been built as a public good infrastructure. So obviously, government has a view on that. RBI has released a discussion paper, and I think somewhere maybe next few months' time, as an ecosystem, as a country, we will reach to the consensus that what is the best way to move forward. There are a lot of opinions right now in terms of ecosystem players, the banks, the fintechs, In my assessment, it may take some more time to settle this down. As on date, it's not a zero MDR. So there is an incentivization coming in from the government. So somebody pays, somebody's already paying for it in that sense. And, I strongly believe that there should be some reasonable incentivization in the ecosystem so that, we are able to invest back on cyber security, the fraud risk, the customer protection, and variety of the things which are required. Expansion of the ecosystem, right? Because we still have another two-thirds of the country has to use UPI, right? So and similarly the similar number of merchants. So I think investments will be required to grow the UPI to 10x from where it is right now.
Okay. I quickly also wanted to get in a sense on your regulation, the 30% cap for third-party applications, which was expected.
It's still undecided. We are still thinking about it. We're still working on it.
Is it likely that the Jan 2023 deadline will be pushed? Because
we will see that. I can't comment on that right now.
Any feedback from the industry?
No feedback. It's a matter which NPCI has to take a call along with the regulator and the government.
Moving on the hot seat today, we put the spotlight on residential solar company Solar Square. The venture recently raised 100 crore rupees in its Series A funding round led by Elevation Capital and Chris Saka's multi-billion-dollar climate tech fund, Lower Carbon. Now, the round also saw participation from existing investors Good Capital, Rainmatter, and angels like Vidit Atre and Sanjeev Banwal of Misho. The venture claims in the last 2 years, Solar Square has solarized close to 5,000 homes, helping owners save on average 40,000 rupees per year in electricity bills. And to talk to us about the road ahead, joining me now is its co-founder, Shreya Mishra. Shreya, welcome to Startup Street. Now, Solar Square was bootstrapped till 2020 as a commercial rooftop solar solutions provider. And in 2020, when you joined in as the co-founder, the company decided to foray and eventually pivot into the consumer residential solar segment. First, what made you pivot? And then also, if you could talk to us about your current offerings. What is your USP? How are you providing hassle-free rooftop solar?
Sure. Thanks a lot, Shruti, firstly, for having me here. I'm an avid viewer of CNBC Startup Street like every entrepreneur on the block. So thanks for having me here. And coming to Solar Square's history, so while we have just raised our Series A of 100 crores, Solar Square was actually a bootstrapped, profitable company all the way from 2015 till 2020, founded by Neeraj Jain and Nikhil Nahar. The company started out as a B2B solar company because that's where solar adoption was happening in the market. In 2020, it's been just about 2 years since we started our foray into residential solar, and it was a big decision to, pivot from being a profitable bootstrapped company. But I think it was a pivot that came from a point of seeing a massive opportunity and seeing a clear white space. We felt that there was no professional company operating in the residential market, taking care of consumers and homes and helping them switch to solar. And we felt that we could be that company. To put some numbers into perspective, Shruti, in this decade, more than $50 billion worth of rooftop solar will be purchased by homeowners in India.
Okay.
And the important thing to note is that all of them are going to be first-time buyers. And a typical Indian family is spending 1.5 to 2 lakh rupees in buying solar from us. It's a little above a two-wheeler, and it's a little below an entry-level car. So imagine the kind of trust that Bharat will need when switching to solar. And that's where Solar Square comes in.
Okay.
Bharat trusts Bajaj for their first two-wheeler purchase. Bharat trusts Maruti for their first car purchase. And we hope that Bharat will trust Solar Square for its first roof purchase. And that's what is our USP, Shruti, really.
Interesting numbers you gave there. And, Shreya, like you said, Solar Square designs, installs and, finances rooftop solar systems for homes, and in addition also provides rooftop solar solutions for housing societies and commercial establishments as well. Like you said, it's been 2 years, but what is the kind of traction you've seen so far? If you could take me to the business growth numbers.
Absolutely. So we started from zero, just 24, 25 months back. Today we are run rating about 100 crore, Shruti. And we've done that by, just about, a few months back, we had announced a $4 million seed round. So it's not that we've grown with a lot of capital. At Solar Square, we believe in building for the long run and, building frugally, but building, with the right, customer service and the right trust for the customers. And that's really, Shruti, what we have focused on. In these last 2 years, we've been very close to the ground. We've only and only heard our customers and understood every single pain point that a typical family would have. Imagine the kind of questions a homeowner would have when he's going to spend 1.5 to 2 lakh rupees in installing a roof system. And so we are a full stack residential solar brand. In these 2 years, we've built technology capabilities. We've built, we are the first company to actually introduce modular prefabricated solar installation designs in India. So compared to a 3 to 5 day installation time, a solar system is installed in 8 hours.
Okay,
so
all right.
My crew would go to the customer's home, and 5 p.m. they'll be out.
All right, all right. Let's now talk about the 100 crore rupee fundraise that you've raised. Like you mentioned, in June this year, you also raised 30 crore rupees. If you could take me through the fund allocation plans, the kind of expansion you're eyeing. And I believe, like you also mentioned, you're looking at product innovations in installation designs, launching in-house NBFC to give 5-minute instant loan approvals to residential solar buyers. If you could elaborate on these plans as well, and when you plan to roll out.
Absolutely. So there are literally 2 things, that we believe will make adoption of solar really easy for Indians. The first is, offering a great customer experience, a professional service that installs high quality systems in a timely manner. And the second is basically easy financing. Because not a lot of families are willing to invest 1.5 to 2 lakh rupees upfront. While solar is a fantastic investment, it gives you more than 4 times return than putting the same money in a fixed deposit. So it's absolute no-brainer. It's cheaper, it's cleaner, it pays for itself. But arranging that upfront capital sometimes is a bottleneck for many consumers. And hence, one of the big allocation of this 100 crore Series A that we have raised will be in fact, launching our own NBFC. We believe that financing is very core to our product. And we are not just going to be a solar company, we are going to be a solar plus financing company. And
all right.
Will help.
Sure. Yeah. One final question. As India aims to achieve its rising energy needs and also deliver on aggressive emission targets, solar generation offers tremendous potential. And we also have the COP27 summit. The fight against climate change has now become a global mission. How do you view the climate tech or clean tech space and the potential that you see for yourself in the future?
That's a great question, Shruti. And I think this is the war of our generation, right? Climate change is the war that our generation has to fight. We are the first generation to feel the effects of it so closely. We are seeing the floods in Pakistan. We are seeing wildfires in Australia, Texas, California. It's at our doorstep, and we are the only generation that can do something about it. And I think technology and startups are going to play a very, very crucial role. I mean, funds like Lower Carbon have become multi-billion-dollar funds. That's the kind of interest the world has in investing in climate tech companies. And I think technology and startups are going to lead this fight.
Absolutely.
And alongside governments,
All right, Shreya, we've completely run out of time, but wish you the very best in all your growth plans, and many thanks for joining us on Startup Street today.
Thank you so much, Shruti.
On that note, it is time for us to head into a short break. But coming up next, Zoomcar, one of the largest car-sharing marketplaces across emerging markets, prepares for its NASDAQ debut, takes the SPAC route to list. A special conversation with Greg Moran, co-founder and CEO of Zoomcar, on the other side. Stay tuned. Welcome back. You're still with us on Startup Street. Zoomcar, one of the largest car-sharing marketplaces across emerging markets like India, Indonesia, Vietnam, and Egypt, has announced that it has entered into a definitive agreement to merge with the innovative International Acquisition Corporation. Under this, Zoomcar will be listed on the NASDAQ with its name changed to Zoomcar Holdings. The official merger is set to be finalized by the second quarter of 2023. And joining us now to discuss this further is Greg Moran, the co-founder and CEO of Zoomcar, and my colleague Shruti. Greg, thank you so much for joining me on the show today. First question to you, can you take us through the details of this merger and the rationale to take the SPAC route to list on the NASDAQ? Was listing in India not an option?
Sure. So thanks so much for having me here today. So to address that directly, so as we think about the brand and the company and the platform, so we are a Delaware registered C Corp to start. So Zoomcar Inc. is the parent company. So the overwhelming majority of our funds, both venture capital and private equity, has come into that entity. And so we've always kind of looked at this as a broader sort of macro play across 20, 25, 30 plus countries. So India being the starting point. But as we think about positioning for the company over the next 3, 4, 5 years, we very much expect to be in that many markets. And I think just naturally being on a more global exchange like NASDAQ is going to be a little bit more fitting for the overarching longer term aspirations.
All right, Greg, Shruti this side. When can we expect you to be listed on NASDAQ? If you could take us through the timelines, do you believe this is the right time considering the current volatile market conditions?
Sure. So I think, of course, as you probably are aware, it's really challenging to kind of go out there and exactly time something in a perfect manner. I think if you look at where we believe this will land, we have indicated sort of formally there that Q2 of next year, sort of that April quarter, is the time frame that we're envisaging. But I think as we think about where the general markets are and relative to where we are as a company, I think we've made tremendous strides both in terms of overall growth as well as efficiency on that broader journey to be well placed for next year once we're out into the public markets.
All right, that's next year. Greg, also let's talk about Zoomcar and its performance so far. You've made a pivot to an asset-light model during the pandemic. If you could take us to the kind of growth you've seen so far, what's the path to profitability looking like?
Sure. So to set the context a bit there, so we actually had started to make that transition to a full-fledged marketplace back in 2018. And so that was slightly interrupted by the onset of the pandemic. But as soon as that second wave opened up early last year, we've seen really uninterrupted growth as we've transitioned fully to a 100% asset-light marketplace platform. And so we've seen actually a growth to the point where we're well over 25,000 registered vehicles on the platform, the majority of which are in India. And at the same time, we've seen over a 6x plus jump in our overall top line achievement as we've gone through that in terms of the gross booking value around the same. And so that, I think, really belies the broader point that we've seen incredible adoption and uptick. And we currently have a presence across over 50 cities in India, and we're in 3 other countries outside. So we expect that growth and that trajectory to continue as we go ahead.
So you expect that growth trajectory to continue. Let's talk about the business. You've also seen your average ticket sizes go up by over 50% from the pre-COVID phase. What led to this jump in your ticket size, and how much money are you making per ride?
Sure. I think just to speak to the first point, I think what's really fascinating for us coming out of the pandemic, we've seen really a plethora of new use cases emerge. And I think one of the key factors here has been just a huge push towards that multi-day use case. So 2, 3, 4 day type trips where people are going out of the city, and that domestic tourism, there's been a huge tailwind, particularly in India, around this. And I think what we've seen is a lot of the bookings that were earlier kind of for a half day or full day have migrated into much larger, meatier ticket sizes. And I think that really, that overall use case behavior has been what has driven that call out and that point. And I think to the second part of that, so I think along with that transition in the ticket size, I think that's really what is building a lot more efficiency at a unit level. And that's what's allowing us to actually earn, at this point, a modest amount at a booking level. But I think ultimately that's what's going to allow us to reach more steady state EBITDA numbers as we continue to scale.
All right, let's also talk about your expansion plan. Like you said, you're already in 50 cities in India and other emerging markets. So what's the expansion plan there? And take us through how much focus will remain on the India market.
Sure. So as you called out rightly, we are in about 50 markets here, cities in India. We definitely believe that what we have on offer is very much applicable for several hundred cities. But I think at the same time, it's really those top 10 cities that are going to constitute a very significant majority of our overall growth. So the tier 1 cities and a couple of the big tourist destinations like Goa, et cetera, would probably form the lion's share of what we think we'll achieve. And I think that's just natural given the sort of hyper-local network effects and the density that you can build in to create that sort of marketplace flywheel dynamic. So that's how we think about India evolving. While we'll add long-tail cities, sure, it's going to be the top 10 that drive the lion's share of it. And then at the same time, so India will remain a majority of our overall volume globally, but certainly Indonesia, Egypt, Vietnam will feature much more prominently. I think Indonesia will probably end up being a number 2 or number 3 country for us. We certainly see an enormous opportunity
Greg, a quick question. If you could take us to the kind of revenues you're clocking currently, where will you end this year, and what's the revenue mix been like for you?
So in terms of the revenue mix, we have typically seen really almost all of that revenue, so 95% plus of that has come out of India. And so we believe that the Southeast Asian markets and the Egypt market will start to form a larger percent share of that. So we do believe that India as a relative percent will actually go down, but then of course the aggregate volumes will continue to rise dramatically. So if you look at kind of where we reached, as I mentioned, we got into 6x plus growth to the point where we're run rating close to $50 million of top line for the India business, and I think that's ultimately something which we believe will be able to grow at a meaningful clip here going ahead.
All right, Greg, we're completely out of time, but thank you so much for joining us on the show today.
Sure. Thanks so much, guys.
All right. In news just in, India's largest winemaker, Sula Vineyards, has received SEBI nod for its IPO. The company had filed their DHRP with the market regulator back in July this year. The public offering will be entirely in offer for sale, under which shareholders like promoters, investors and others will participate. Kotak Mahindra Capital, CLSA and IIFL Capital are the investment banks working on this issue. With that, it's a wrap on this edition of Startup Street. More news and updates continue on the other side. Stay tuned.